$48,000 is disappearing from your Tampa real estate returns, and you won't see it coming. Most investors believe HOA fees are a minor line item, maybe a rounding error on their spreadsheet. That's the biggest cash flow mistake you can make in Tampa right now. By the end of this video, you'll know exactly how much these hidden fees are actually costing you, and the 3 specific steps to stop them from destroying your returns. Here's what research shows. The average Tampa investor pays $400 to $600 per month in HOA fees. That doesn't sound devastating until you do the math. Over 12 months, that's $800 to $200 annually on a single property. Over a 5-year investment hold, you're looking at $24,000 to $36,000 in cumulative HOA payments, money that never appeared in your original cap rate calculation. But the real shock comes when you factor in the fees most investors never budget for at all. Data from the Tampa Association of Realtors and HOA disclosure documents reveal a hard truth. The advertised HOA fee is not your total expense. Most Tampa properties also carry special assessments, one-time charges for roof repairs, parking lot resurfacing, or reserve fund shortfalls. These can range from $5,000 to $15,000 without warning. And then there's the insurance component that's embedded in your HOA dues. As Tampa property values climb and insurance rates spike, those dues climb too, sometimes by 15% to 20% in a single year. A $500 monthly fee can become $600 or $650 in year 2. Let's ground this in a real scenario. You buy a $200,000 condo in Tampa with an advertised $500 HOA fee. You factored $6,000 annually into your cash flow model, but you didn't account for the $8,000 special assessment notice that arrives in month 3. You didn't predict that insurance would spike 18% in year 2, raising the HOA fee to $590. You didn't budget for the reserve study shortfall announced in year 4. By year 5, you've paid $31,000 in HOA costs on an investment you thought would generate $10,000 annually in positive cash flow. Instead, you're breaking even or negative. Here's where the belief gap matters. Most investors think HOA fees cap out at the advertised monthly amount. The correct reality, according to IRS publication 527 on rental property expenses, is that all mandatory community fees, special assessments, and reserve contributions are fully deductible, but only if you actually paid them. That's the problem. Investors aren't paying them because they never saw them coming. The delta is brutal. A $200,000 investment property can see a $10,000 to $20,000 reduction in annual cash flow due to unseen HOA fees. Over 5 years, that's a $24,000 to $48,000 impact. Now let's solve this. Here are the 3 specific due diligence steps to mitigate HOA cash flow mistakes before you close. Step 1. Request the full HOA reserve study and the last 3 years of meeting minutes before you make an offer. The reserve study tells you if the HOA is underfunded, a red flag for future special assessments. Meeting minutes show patterns of emergency spending and disputes. If you see a pattern of unexpected costs or reserve concerns, factor an additional 15% buffer into your HOA expense line item. Step 2. Call the HOA property management company directly and ask 3 questions. What special assessments are planned for the next 5 years? Have there been any unfunded items moved to reserve? What was the average annual increase in HOA fees over the past 3 years? Don't rely on the seller's disclosure alone. Get it in writing. Step 3. Use the IRS Schedule E form to model your actual deductible expenses. Add the monthly HOA fee multiplied by 12, then add a conservative estimate for special assessments based on what you learned in steps 1 and 2. Run this number against your cap rate target. If your cap rate drops below your minimum threshold after including the real HOA costs, walk away. There's another deal in Tampa that doesn't carry this drag. The stakes are clear. Ignoring these HOA fees cost you $10,000 to $20,000 annually, which compounds into a significant loss over a 5-year investment cycle. This is the difference between meeting your investment goals and falling short. If you want the complete spreadsheet and the HOA assessment checklist, the full breakdown is in my book, The HOA Tax Trap, link in the description. Real Estate Rewards Research. Hit subscribe and ring the bell. I'm dropping a video next week on how cap rate compression is hitting Tampa property prices right now, and you don't want to miss it. What's your biggest takeaway? Drop it in the comments. See you in the next deal.